The Reserve Bank's Deputy Governor, Michelle Bullock, today said most households are in a good position to cope with rising interest rates, but she stopped short of saying how far the RBA might have to raise rates to control inflation and spending. Let's get some thoughts on that now with our business editor, Ross Greenwood, who joins me. Ross, this is the question, of course, every borrower wants an answer to.
Oh, it's so true, because Australia's rate right now, the cash rate, 1.35%, is well below those of other nations. And I'll give you one small example here. Last week, the Reserve Bank of New Zealand, when it raised interest rates to 2.5%, said it believed that rate was now contractionary, that they'd be gone beyond neutral. Now, oddly enough, in the Reserve Bank's minutes today, it talked about this concept of a neutral interest rate and where it was. It didn't actually come to a conclusion. And similarly, Michelle Bullock, in the speech she was giving today, talking about Australians' capacity to cope with rising interest rates. And she talked about the amount of equity that people have got in their homes. That seems pretty good for most people. The savings that they've got, that's pretty good. The fact that they have jobs, also good things. But the other aspect of this is just, where do these interest rate rises stop? At that, really, the Reserve Bank appears to be trying to grapple for an answer, as it also grapples for an answer about where inflation ends up in Australia. Just have a listen to what she said.
The sector as a whole has large liquidity buffers. Most households have substantial equity in their housing assets, and lending standards in recent years have been more prudent and have built in large buffers for interest rate increases. Much of the debt is held by high-income households that have the ability to service their debt, and many borrowers are already making repayments well above what is required. And furthermore, those on very low fixed-rate loans have some time to prepare themselves for higher interest rates.
The RBA, Ross, might have given one hint in the minutes from its latest meeting, where it said it thinks inflation will peak this year.
Yeah, that's right. And that is the hint that they've given. So in other words, as inflation peaks, you would imagine that not far behind that, interest rates should peak as well. So the Reserve Bank, in its minutes of its previous meeting, remember, it raised interest rates at that meeting by 0.5% around 2 weeks ago, said inflation is forecast to peak later in 2022, then to climb back towards the 2 to 3% range in 2023. Inflation is expected to moderate as global supply side problems continue to ease and commodity prices stabilise. So just on that, Kieran, we know that oil prices, say, for example, are right now below $100 US a barrel. The timber prices have fallen. The copper prices are almost 25% off their peaks as to where they were. All those things are taking inflation out of the community. The real issue, again, that the Reserve Bank did note today is that really it's about the mindset, the expectations of people with inflation for greater pay rises, and indeed the propensity to pay the higher prices that are out there. That's going to be the big thing, because it's almost a race right now to try and make certain you can quell the inflation before those wage rise expectations become embedded. That's the real fundamental problem, not only the central bank, but also the government will be facing over the coming months.
All the talk and discussion around the dramas in the economy, though, it hasn't really affected our spending, not yet, at least anyway. That was shown in the JB Hi-Fi performance for the last financial year.
Yeah, so JB Hi-Fi today updated the market, really, Australia's largest consumer electronics retailer. This is what it came out with. Record sales, up 3.5%, so $9.2 billion in the year to June 30. Net profit up 7.7%. In fact, in Australia, it was up 11%, $545 million. So what they're saying is, notwithstanding the pandemic, there was massive jumps in online spending as well for JB Hi-Fi. And this really shows, if you like, the same story that 5 months, consecutive months of record retail sales shows. And that is, Australians really have got an ability and a capacity to spend money. They're continuing to do so. And really, the interest rate rises so far have not caught up with that spending, largely because they've got pools of savings. They've probably, in many cases, got home prices that have risen during the pandemic to record levels, so they feel comfortable about that. The question is, when do these interest rate rises, when do the price rises catch up with the household, with the business community, and when do we start to see some type of downturn? The Reserve Bank at this stage thinks it's later this year.
Ross, thank you.